Good morning, everyone. I'm Steve Ankerstar, and thank you, and welcome to the Ankerstar Wealth Morning Show. Today, we're going to talk about alternative investments. These are investment opportunities that are live and available to you today if you qualify for them and if they are right for you. So we have to talk about that first. Before we begin, this is a financial education presentation, so you have to do your own due diligence before you act upon anything you hear in this presentation. More information is available at ankerstarwealth.com. Now let's talk about the whole idea of alternative investments. You may have seen these on TV or heard about your friends, or some people do use these as cool things to brag about at cocktail parties. But when you think of a traditional investor, young age, gets a job, puts away some money into a 401k, starts funding their IRAs and building wealth that way. Simultaneously, a lot of folks try to get into a home early on, where they buy the home and start building wealth through the 30-year mortgage process, where you're slowly building equity every time you make that monthly payment. So those are kind of two legs for doing that. Some folks use insurance. I don't use that. I think it's too expensive. Some people buy other real estate, different investments, crypto, all of that stuff. Well, one of the alternative investments that's out there is a whole package that professional investors use. Think, the Harvard Endowment Fund. I don't know exactly what they're invested, but think funds like that that are searching for professionals that have a very niche expertise somewhere, that they can go out and they can make that generally 10% plus type of return, which generally the markets give you 10%, but it's a heck of a ride. Right. And, you have the phone in your hand that you can check everything, to the second. Right. So that can work against you depending on your personality. But I would say if you're more maturing into your wealth building phase, consider alternative investments. I hold a handful, 3 of the 4 that I'm talking to you about today. I already hold the other one. I'm not going to participate in, but I would, except for I'm getting my own building next year, and that's its own real estate exposure. But really, you have to qualify for these. You have to be an accredited investor. And honestly, it's not really right for your portfolio until you have about $1 million investable to get into these things. The first 2 I show you can get in for a little bit less, but the last 2, you need to be a fully qualified accredited investor. And even then, if you have $1 million, if you're swinging $1 million bat in the investing world, even then, for each alternative investment, you should really only use about 5% of that to spread out your risk, right? So think of the super wealthy, you're going to have a whole portfolio of these. But, from where you are now to the super wealthy phase, you start building these out over time. A lot of these, instead of having an app where you can check the stock, to the second, these are, you put your money in and you get an update maybe quarterly. Right. And it's usually in the form of a PowerPoint, maybe a little video from the folks that are running things, giving you an update on how's it going. Sometimes your money's locked away. You can't get it back out. So there's a lot of downsides that if you're not ready for something like that, then just use this update as awareness. But if you are ready for something like that, reach out for me. Again, generally for every $1 million you have investing, you can put 50,000 or so towards something like this. And that's about the right relationship to keep enough in the overall market, but also you have additional exposure. So, all right, let's go ahead and take a look at the first one here. First one is through Blackstone. Blackstone's the largest private equity firm in the world. They have several alternative investments. The ones I'm going to show you here are, the first one is their real estate exposure. This is called BREIT. You can look at the website there, BREIT.com. This is their live website. So, institutional quality real estate for income-focused investors, right? So you put money in. It's a subscription agreement, so you have to sign some paperwork versus just going online and buying it through your Schwab account. And then when you try to get your money back out, you put in some paperwork and apply to get your money back out. So this is not something you want to do with money that you just have sitting there that you may need over the short term, right? So think long term, but this does give you the real estate exposure. When you look at the performance, it's down this year. So, a lot of folks, I put in this in January and they're like, Steve, everything else is up. This is down. I'm like, this is a long-term position, but 3 years annualized, 17.4%, pretty good. The distribution, 4.5%. So if you think of that, divide that by 12, it distributes 0.75% monthly. That's pure cash coming into your account. You can hold these in IRAs, which is unique about the first two that I show you here. So, there's a whole lot of information on here. Where you invest matters. The power of Blackstone. This is the top. This is the best of the best. It really is. So if you get approached by somebody to do real estate investing, that's not local and you don't have specific information on, I would tend to go towards the worldwide experts at Blackstone. So consider. The second one I'll show you looks pretty similar because laid out the same company, but this is called BCRED. This is the Blackstone Private Credit Fund for institutional caliber private credit solution for income focused investors. So again, it pays monthly cash. So that's why it's sometimes, a lot of times it's appropriate. I don't live out of my portfolio because I'm still working, but, for those that aren't working that now need to generate income with your portfolio, the annual distribution yield is 10%. So divide that by 12. What's that? 0.88 and change, somewhere in there monthly, that gets you over, each month to get you that 10% yield. So 10% coming in the door just from the yield. Just from the stuff, from the money this kicks off, and that's independent of what the actual stock price is doing. So the credit space scares a lot of people. It does pay. It pays so well because of the extra risk that's there. Absolutely, yes, this was part of the problem in 2007 through 2009. So there's two opinions there. You can think, well, we regulated what we needed to out of that, and that's behind us, and now it's an opportunity to make large returns. I personally believe that, but you decide which you believe. Or you could say, I will never, ever, 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 ever put anything into some high yielding credit stuff that I can't really understand, all that stuff. So, don't go into it if you don't want to. Stick with real estate because it's a little easier to understand. For getting updates, though, they do have a banner across the top here. So we're pretty good to get information out because they're the best in the world, right? And then they have a video, over here on the side, if you want to take a look at that to kind of learn more. Again, for the first two I showed you, the BREIT, BCRED, there are qualifications, but they're far lower than the $1 million investable qualifications. So if you're interested in something like that, you buy it, it goes right into your Schwab account. The money kicks right into your Schwab account, and then we can reinvest in Apple or more shares of this, or whatever we decide to do in your account. So those are the first two I want to show you. The third one is something that would be held outside of your portfolio. Okay, this is a commercial real estate opportunity. This is live. It's actual. Keith sent this to me last night. I reviewed it and then wanted to kind of bring this to the clients out there that are interested in something like this. First of all, you would be a limited partner, so you have to understand that relationship. You'll be signing paperwork saying that you'll be a limited partner, and you'll be getting a K1. The BREITs and BCREDs are different, but for this, you're a pure limited partner. You'll get a K1 every year for 3 years. You put your money in, they target 14% IRR, which really leads to a 1.5 MOIC, multiple of invested capital. What does all that mean? You put 50,000 in, and in 3 years, that should be 75,000. And what I like about this particular group, if you can see my cursor here, they've never lost investor principal. Blackstone can say the same thing. That's why these are the professional of professionals, right? And the orange in the middle there, investors get paid out first. Our firm gets paid out last. Literally, if they do this whole project and you don't get your money, they don't get a dime. That's a pretty good incentive. Right now, if they do it better than that, I think they keep all the rest. I don't know exactly how the math works when they hit their goal, and I know they aren't intending to work for free. So this is how confident they are. I've had lunch with Keith, who's the boss here. Sitting across the table, trusted everything he said. Have investors that have been with Keith for a number of years that have given him glowing reports on what he and his team are able to do here at Buchanan Capital Partners. I don't have a dime with them yet. Again, I want to, but I have this other building that I have to put significant money in. But they have these projects, right? So they come about every now and then. They only take the best of the best, so sometimes they just aren't available. But this one just came out. They're taking a request for interest. So it's kind of like a pledge, if you will, saying, yeah, I think I'd like to put 25K or 50K or 100K towards this. And then later on, the paperwork flows. That's when you have to actually make the decision. So if you're interested in something like this, let me know. What is this particular project? This is a Pros Lonesome Quail. It's in New Braunfels. There's the actual chunk of land. This is I-35 over here. There's the big Walmart distribution center there in New Braunfels, if you are familiar. Here's the expectations, 14% for 3 years in a row. Again, there's your MOIC, your equity target, where you have 100K in, 150K back out, or $1 million in, 1.5 out. All long-term capital gains, and they don't take their fees. They take the extra return that's left over on the end of it. There are risks, no doubt. Everything entails risk, but like I said, Keith prides himself on never having lost money. And again, they're working for free till they make you 14% a year. Love the business model. Here's an overhead shot of the projection of that plot of land. You saw the actual dirt. This is what they intend for it. Here's pictures from a artist concept of what it's going to look like driving in the door. And then you talk, of course, they are the money behind it, and you have the development partner, which is Alliance Residential, which has a strong track record. Largest multifamily developer in the country, #1 in Central Texas. Okay, that's pretty good. Track record information is there. Location overview. Here's what we're talking about. There's the distribution center. There's the entirety of New Braunfels. So again, they start kind of from the what is it, and then work their way back out. And then, of course, why invest in New Braunfels? Yeah, it's the heart of Central Texas, right? That whole I-35 stretch between San Antonio and Austin, blowing up. It's been blowing up for years, blowing up in a good way, not, bang, blowing up, but growing in a good way. New Braunfels still has that small town charm. See how long that lasts. So did Round Rock before it got too big, or bigger, I should say. But certainly it's a very popular area. So putting in the residential stuff in here seems like a no-brainer. So that's kind of the teaser slide deck. There's like a 35-page slide deck if you really want to get into the specifics. If you're interested in something like that, let me know. Again, I would say min 50K if you can. 25K, we'd have to take a look at your situation. I am a financial professional, so I can accredit you. I just have to, I could either look at your accounts, or if you don't have it in your accounts with me, I just need to see your tax returns to kind of prove that you are at the accredited level, and then you're off to the races. All right, last one I want to talk to you about is the local folks. You've heard me probably mention them before. Moonshots Capital. Crazy cool name. Couple of West Point grads, Kelly and Craig. There's your disclosure. They invest in extraordinary leadership. So they're looking for founders. This is venture capital. So transitioning from a limited partner in real estate, commercial real estate, to now you would be a limited partner in venture capital, where you're backing startups. So you think of huge upside, this is your huge upside. Keith and gang are saying we're going to get you 14% for 3 years, and you're going to put 50% on your money, and then you're back out of the project. These guys are saying, put your money in. We have no idea where this is going to go, but certainly they're excited about it. So there's the folks that we work with. I've had the privilege of meeting and working with both. I do have money with Moonshots. I have several clients with Moonshots as well. Again, both West Point grads. Kelly was the winner of The Apprentice season 2, if you happen to recognize his face there from back in the day. But accolades that speak more than resumes that blow everybody else out of the water. And it's their judgment really in picking these founders and picking these companies that leads for you to make your money. So all kinds of what I call nerdy finance stuff on this chart. Where are they? They started back here with an aggregate, then they both had their angel investments, and they had syndicates, and they have fund 1, 2, and 3. That's marching up the left-hand side. They're raising $100 million for fund 3. I am personally, and my clients are all in fund 2. So that's why you don't have the full realized return, because it's not done yet. It's still in process, and we'll show you that here in a second. So here's your angel investment syndicates, fund 1, 2, 3 across the board. Fund 2, ID Me, for the military folks in the crowd. I know you recognize that name. Blake Hall's the founder. Got to meet him the other day at a conference they had. And then fund 3, this is only just the beginning of the names that they're going to put in here. ID Me's in here twice because they're blowing up. That's kind of all I can say. Is it's good to be on the ID Me train. What I can say is that they started as a site for pretty much veterans to be able to get their discounts. And wow, did that whole concept prove useful to be able to verify somebody's identity. So it went over into, largely the uniformed folks, firefighters, police, but then the behind the scenes usage of ID Me is really pretty amazing. So expect to hear more from that. But so yeah, continue to focus on extraordinary leadership. Again, they do tend to slant towards the military veteran and diverse, late seed and Series A rounds, if you aren't familiar with that. And I don't really speak it fluently either, but I'm familiar. That's just the early stage stuff. Military folks out there, especially fellow fighter pilots, Red 6 Aerospace. Yep, got to meet the founder the other night. Again, it's one of the companies that we invest in Fund 2. All right, there's several more slides. I'm not going to go into any of these unless I pause on something that sees that there you go. There's maybe the raise. So if you want it, you can't get into Fund 2, it's closed. So if you want into Fund 3, here's what you're looking at. It's a 10-year term. So that's what you need to know. So BCRED and BREIT, you put money in. You have to sign some paperwork, and then you sign some more paperwork to get your money out. About 4 times a year that you can get your money back out. Keith Buchanan Capital, you put your money in, you don't get it back out for 3 years, right? I think you might get a distribution there. I don't know. But 3-year fence on that money. Here with Moonshots, you're looking at a 10-year fence. So don't put money in you're going to need in the next 10 years, right? So that's where I'm going to go ahead and stop for today. So we'll stop sharing here. So overall, to kind of conclude, the alternative investment space is amazing. That's where you can get some impressive returns, especially, with the Buchanan Capital Group, 14%. They're pretty much guaranteeing it, or they're not going to get paid. Who doesn't like to hear that kind of, offering, if you will? He just wish he could find more of them. They just don't, there are many unicorns out there. Same thing with Moonshots. They wanted, in a perfect world, you'd fund everybody. No, absolutely not. They said they look at thousands of deals and they pick a handful. And honestly, they're looking not only at the idea. You've heard me talk about, the horse and jockey concept with the stock and the CEO, same thing, startup and founder. It's the horse is the startup, is the business model legit? And then the founder is now the jockey, and they're judging it for extraordinary leadership on that founder to be able to go out there and make it happen in the face of who knows what, right? So if you're interested in any of these, just hit me up somehow through social media or through email or whatever, and I will get back to you with the exact specifics of what we need to do. Again, not right for everybody. You're putting your money away for time. It's a very mature type of investing, but the returns are there to support it. And it's kind of fun too. It's the market is fun in itself and can be not fun, i.e. 2022, but they're also investing in something special. And each of these tend to have, meetings and updates and things that are really cool as to what's going on. So you kind of get on the inner circle of information of what's going on. So that's all I have for today. Thank you so much for listening in, and we'll catch you tomorrow. Catch you Monday. Talk to you then. Bye.